Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Concerns about overvalued AI stretch into a second day, with Asian tech stocks extending the Wall Street sell-off triggered by China's progress with the technology. Nvidia edges up post-market after losing $589 billion in value, the biggest one-day drop in US market history. The chipmaker says DeepSeek's advances will keep demand strong for its chips. Donald Trump calls DeepSeek's release a wake-up call for US firms to stay competitive. On tariffs, the president says he wants across-the-board levies, quote, much bigger than 2.5%. Good morning, happy Tuesday. So where do markets go from here after the rout of yesterday? Focus, of course, on the tech index, the Nasdaq 100 falling around 3%, the S&P lower by about 1.5%, and that historic drop for Nvidia losing around $600 billion worth of market cap, down 17% by the end of the close, and the ripple across, of course, across the Mag 7 on a week when you get 4 of the 7 reporting earnings, of course. The other factor to include and to weigh up for investors is the tariff threat being put back on the table by President Trump. He wants to see above 2.5% in terms of that across-the-board tariff. We'll see how that unfolds with his Treasury Secretary now firmly in place. Mr. Besant, European futures currently unchanged, looking for direction, more clarity maybe on how this AI story evolves. FTSE 100 futures currently up 0.2%. S&P futures, after the drop of yesterday, currently flat. Nasdaq 100 futures pointing up just by 0.2%, again, after dropping more than 3% yesterday. Let's flip the board and have a look across assets. We will remind ourselves that the Fed is meeting and making that decision tomorrow. 4.55 right now on the benchmark 10-year. Yields are currently up around 2 basis points. The benchmark at 4.55. Euro dollar at 104. The story of dollar strength is back for us today. That's weighing on a number of its currency pairs, including the euro and the pound. The euro currently down 0.5%. Weaker in the session on strong US dollar, and that ties largely to the tariff story that continues to come through from Trump and his Treasury Secretary. Brent at 77.47, currently up 0.5% on oil, and copper softer by 0.6%. Trump calling out the metal sector for an area where tariffs could be imposed, along with chips and pharmaceuticals. Let's cross over right now to Asia, where Avril Hong is standing by in Singapore for a check on the markets there and how that AI story continues to ripple through. Avril.
Yeah, it's that continued reassessment of the AI investment case. The DeepSeek fallout continues. Asia getting hit hard. Japan, the drag today, an extension of yesterday's losses. The Nikkei today declining by the most in about 2 weeks. Many major markets in Asia are shut. We have Hong Kong on a half day, and this is the picture going into the long weekend. Chinese tech shares are doing well, and if they continue this outperformance by the time some of these big US tech names are done with earnings this week and after the long Lunar New Year holiday, some of our MLive colleagues have flagged maybe it's time for a rethink, a new narrative. Of course, some of these Chinese tech names are doing well today because of this idea that they could benefit from cheaper AI costs thanks to DeepSeek. Flip the board. As we rake through what we're seeing in Japan, the deep losses today were no thanks to the chip shares. Advantes, 2-day losses, 18%. This is a supplier of testers to Nvidia. It's experienced its worst rout since August. SoftBank also under significant pressure. Keep in mind, though, that these stocks actually rallied pretty hard last week thanks to SoftBank, saying that it was going to be participating in that US AI infrastructure fund. But just to show you how the entire AI supply chain is getting forced into a rethink this week. Furukawa, this is a data center cable maker, seeing steep losses. TEPCO, power generation company, also under pressure today. So really that rethink well underway in the Asia Pacific. Tom.
Avril in Singapore, thank you very much indeed. Avril Hong with the check there on some of the infrastructure around AI and the energy piece in terms of the pressure that's coming through. Does software, though, gain on the back of the developments coming through from DeepSeek? That is a potentially longer-term question. To the details around the impact then on this company. Chinese startup DeepSeek has, of course, upended global markets, and we saw that in pronounced fashion yesterday as its cost-efficient AI model is likened to that of OpenAI in terms of capabilities. The release of R1 as they've named it, has sent, of course, shockwave through the US tech industry, leading to a re-evaluation of the economics of the AI investment boom. Let's bring in Bloomberg Intelligence's Robert Lee. And again, for context, Rob has been following this company for about 7 months. So it's been ahead of the curve compared to many who are just catching up to this story. Rob, is this then, this is the multi-billion, multi-trillion dollar question, is this the turning point for the AI sector? Could this kill demand ultimately for Nvidia's products?
OK, nothing like a loaded question to start this little section off with. Thanks for that. I guess, is this a valuation correction, or does this have more fundamental impact on the outlook for these businesses, Nvidia included? I suppose on the latter part of the question, you've heard Nvidia's response, and I think things could potentially go two ways, because with the emergence of lower cost models from DeepSeek and the like, could potentially seed the market. So on a positive scenario, maybe that helps to stimulate demand in the market and could ultimately be a positive thing. Now, as you know, I'm not one to sit on the fence normally, but I think the debate on that side remains open and uncertain because this is a very fast-moving story. Equally, there's a negative potential implication where things could go the other way. So I think we would generally have to wait and see on that. But in terms of valuation, as we all know, these stocks have been priced to perfection, very high expectations, which made them very vulnerable to a negative piece of news like this. So I think, as we've said in the last 24 hours or so, this is a real wake-up call, not just for investors, but for people in the industry. And you've even got the likes of President Trump commenting on it. So I guess ultimately, cost down, cost reduction is a major driver in technology markets. So that's a positive ultimately. The key issue for the industry is whether consumers are going to put their hands in their pockets and actually start paying for these products.
OK, let's see if we can get you off the fence for the next question then, Rob. Is this, was the market reaction yesterday overdone, or is this indeed the biggest challenge that this sector and this story faces?
Well, there's something in tech circles referred to as the hype cycle. And even if we go back to the internet, what ultimately turned out to be a bubble back in the early 2000s, whether it's metaverse, crypto, whatever it may be. Maybe it goes back to human nature, human psychology. People tend to overestimate in the early stages of an industry. You then get a period of disappointment where expectations are realigned, and ultimately, assuming that sector or that industry has good fundamental underpinning, then we hit a steady state and onwards and upwards. So I guess it's been a one-way street for AI in terms of news flow and sentiment over the last 18 months or so. We're finally seeing data points come through that potentially question that narrative. I still think the fundamental outlook within AI remains positive, but again, it's not a one-way street. And I think the biggest challenge all these companies face, regardless of what region of the world they are, is monetization. Because again, even if you did a straw poll in the studio, the viewers who are looking at this at the moment, how many of us are actually paying for AI services at the moment? I'm sure we've all played around with them. We've looked at the free products. But if you look at the level of monetization coming through from these companies at the moment, given that they're spending tens of billions in capex per quarter, I do not think they're monetizing anywhere a fast enough rate. So monetization, I think, is still the greatest challenge that this industry faces, really, in the short to medium term.
OK, so the question still comes back to return on investment, doesn't it? And we'll see to what extent executives are grilled on that question with the earnings coming through from Meta and Microsoft this week. Rob Lee from Bloomberg Intelligence, thank you for the analysis. We're going to be discussing the tech route, by the way, and more with ARK Investment CEO Cathie Wood. That's at 8:30 a.m. UK time, so stay tuned for that interview. Let's stay on the DeepSeek story, though, because President Trump, as Rob was saying, has also weighed in on DeepSeek, speaking at a Republican Party retreat in Florida. Take a listen.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser-focused on competing to win.
Let's bring in opening trade anchor Kriti Gupta for reaction to this. Kriti, what do you make of the fact that Trump actually called out DeepSeek in this address? What does it tell us about how important, to what extent this is a priority for him and the team?
Well, it's both a rare moment and incredibly unsurprising. Rare in that a U.S. president doesn't usually comment on things that have crashed the stock market, unless, say, for example, the collapse of Lehman Brothers is one example. But it's a rarity for a U.S. president, a politician really, to comment on what the stock market is doing. So that moment in itself, I think, is worth noting. That being said, unsurprising, he's been warning about this kind of Chinese competition narrative on the campaign trail in his first president term as president, and of course now in his second as well. I think what's interesting here is that he's really subscribed to this idea ahead of this sell-off that you need a lot of money to make AI actually happen in the States. You need to invest in data centers. You need to invest in talent. And you can see how he's approaching that with some of the deals he's gotten, with up to $500 billion from Democ Properties, the founder there, or $200 billion with SoftBank, really trying to broker these deals at enormous scale, which almost underscores the same approach that the hyperscalers had when it came to AI, that the barriers of entry are so high that only those sitting on billions and trillions of dollars can actually make it happen. I think he's probably been thrown for a loop as well. I think perhaps one thing that he may be able to really underscore here is that in the following hours since that sell-off that's shaken the markets in terms of valuations, you also saw security concerns come up with DeepSeek as well. And that's something that we know Donald Trump has been very vocal about when it comes to Chinese technology operating in the States.
Yeah, and it was also a reminder that he does see the world through dollar symbols, doesn't he? I think that's fair to say. And he also talks about the fact that this was cheaper may be a good thing as well. Talking of dollar signs, tariffs. And he talked again. We'll take a listen to what he had to say, because the president says he wants universal tariffs on U.S. imports to be much higher than 2.5%. That's in contrast with an earlier FT report that his newly confirmed Treasury Secretary Scott Bessent is pushing for the smaller number. Take a listen.
In the very near future, we're going to be placing tariffs on foreign production of computer chips, semiconductors, and pharmaceuticals to return production of these essential goods to the United States of America. They left us and they went to Taiwan, which is about 98% of the chip business, by the way, and we want them to come back.
I mean, Kriti, the main takeaway from me, and correct me if I'm wrong, is that, look, tariffs are coming in some form or shape. We still don't know exactly where, but he is committed to tariffs. What was your takeaway?
Well, they're kind of working for him at the moment as a negotiating tactic, and the drama over the weekend with Colombia was a great example of that and how quickly they can come back. We're not talking about months or years anymore. We're talking about the matter of weeks in terms of enabling that, given that he has so much support not only in Congress, but then, of course, within his own administration as well. I thought what was interesting in some of the comments that he made was that he's calling out very specific sectors here. The commodity space, of course, you mentioned as well. He's talking about semiconductors, pharmaceuticals, and then again revisiting the idea of automobiles from Canada and Mexico. This is something that actively affects the trading here, right here in Europe, with some of the kind of car makers here. The problem, though, is the execution of it all, because he and Scott Bessent, by the way, are going to come across the exact same difficulties that Janet Yellen and Joe Biden came across in the last term, which is that every time he put in a tariff, it comes back to kind of haunt the American consumer. That works right now because the American economy is strong and the consumer is resilient. Will it happen again in, say, 2 years for the economic cycle to change? And that's where I think Scott Bessent may be privately issuing some warnings here that you can't go as tough as maybe previously stated.
OK, and no doubt Kriti Gupta, anchor of the opening trade, will be, along with the team there, monitoring some of those European stocks in terms of the pharma space and autos on the back of this news. Kriti, thank you for the update. Now, it was a bruising session, to say the least, on Wall Street, of course, as fears around China's AI progress sparked that huge tech sell-off. Nvidia losing close to $600 billion in market share, $589 billion, the biggest one-day drop in history. Let's bring in M9 strategist Mark Cranfield for more market details and market analysis on this. Mark, the dollar stronger in Asia today. Is that a tariff story or an AI story?
A little bit of both, but probably slightly more to do with the tariff front. In fact, it was a story that started to develop yesterday, as Kriti was saying earlier, with the Colombia on-off situation in relation to potential tariffs. And foreign exchange traders, really, they had a pretty easy week last week. Donald Trump's first week in presidency didn't really have much to do on the tariff front. Dollar was a little bit weaker. Maybe people came into this week a little bit complacent, then bang, everything changed. Not only do we get the first salvos yesterday, we get a follow-up today. As you were saying, there's an interview with Scott Bessent, and then the follow-up from Donald Trump himself. So it looks as though tariffs are very much around, and you can see the dislocations are starting to come back in the foreign exchange market. The fact that the US dollar is starting to get pretty strong against its G10 counterparts is a very strong signal that traders are taking this fairly seriously. If it was just the emerging market space, maybe you could say, well, it's just a bit of a one-off thing. But clearly the euro, the Australian dollar, the Japanese yen, they're all on the back foot, and there's something of a haven bid for the Swiss franc, which traditionally has been the outstanding currency if you're looking for a really safe play within the major currencies. Huge option volumes yesterday for the Swiss franc. Clearly, people are getting concerned, and it's not something which is likely to go away in a hurry. So we had an easy first week. We're having a much more difficult second week, and it looks as though foreign exchange traders now are going back to analyse the playbook they had in 2018, 2019. How do we deal with the fact that tariffs may well come? They may well come quite quickly, and how does that apply to the US dollar? It's starting to look like that again, and foreign exchange traders are taking note of what Mr. Trump has done in the past.
Okay, really interesting. Reaching for that 2018-2019 playbook with volatility back in these FX markets and a flight to safety with the Swissy in focus. M-Live strategist Mark Cranfield, thank you, as always, for the context. Coming up, global tech is under pressure, of course, as that cost-effective AI model by Chinese startup DeepSeek is raising those questions about the dominance of US technology. We're going to switch focus to Europe and see how this ties in. TravelPerk, a major startup in the European space, raising a lot of capital. How is the DeepSeek story going to impact European startups with that AI focus? That question to the president and COO of that company coming up. Stay with us. This is Bloomberg. Welcome back now as Silicon Valley grapples with the impact of Chinese startup DeepSeek upending global markets. TravelPerk has raised $200 million in its latest funding round to expand its US presence. The travel management startup is also hoping to invest more into its own AI capabilities. But the emergence, of course, of a more cost-effective AI model from DeepSeek is raising questions about the competitiveness of products developed by Western firms. Very pleased to say I'm joined now exclusively by TravelPerk's president and COO, Jean-Christophe Taunay-Bucalo. Jean-Christophe, thanks for joining us. It's a big raise, $200 million. It's an E round. You're valued at $2.7 billion US dollars. It's notable. You've got some serious backers as well in terms of your investors. Let's start with the question about DeepSeek, though, and the impacts on the tech space. Does a cheaper, more cost-effective model with similar capabilities to the likes of OpenAI, is that good news or bad news for a company like yours?
It's actually, for a company like ours, it's quite neutral. And the reason is what we do is we work on our own set of data. So we use the different type of technology that are available, whether they are open source or not, and then we process it and we use the technology on top of our data. What's really important for us is to have the human capability. We have particle physicists that work for us. So the key is actually having the capability to interpret the technology and then take whatever model is the most suited to the job to be done. Because we are not in the business of building model, we are in the business of using model to deliver the best value to our customers.
Well, are you looking at the models you use now and reassessing? I mean, if OpenAI charging $200 for their top end model, are you re-looking at the models you use and maybe incorporating DeepSeek?
So it's actually not the main motivation, because in the grand scheme of things, this is something that will impact probably widely the consumer industry. But for us, it's more about, is this model adapted to what we are trying to achieve? And in that, we have always used actually a plethora of different models in order to deliver the best value. So raising money help us not so much to actually pay for the model themselves, but more recruit the best AI specialists all around the world that will know which model to use for each use case. And that's really where the deep value lie, at least for us that are not building models. I can understand that it's very different if you are on Meta or Google and you're actually building models.
Yeah, so it's about the talent and making sure they can adjust these models to target your specific audience. Before we move on to your expansion to the US, just on the question of the cost of compute, does it derail, do you think, the assumptions that the cost of compute, the spend on CapEx, is going to have to be ever higher to get to these kind of AI breakthroughs? Does DeepSeek derail that assumption, do you think?
I think it does. And I was listening to you just before, and it is the story of every technology. It has been the same for the mobile internet. It has been the same for internet in general. And that's what allows each of these technology to become mass market. And it's fantastic. It makes AI available to more people all around the world. And I think that's really important. What I think we will see different model being used for different use cases. We will see a segmentation on the model depending on what you are trying to do, very much like we have seen in mobile internet or internet in general.
So let's get to the US then, your expansion plans in the US. How much of the US, to what extent is the US market a priority for you and the TravelPerk team, and how specifically are you planning to expand there? Is it further acquisitions? Because you've been quite acquisitive.
We have been quite acquisitive indeed. We acquired a US company a little bit earlier in 2024, and now we acquire this formidable expense management platform, Yokoi, out of Switzerland. The US is a key priority for us. The US is the largest business travel market in the world, and when you work in business travel, it's important to be able to help the traveler wherever they might be in the world. So most of the capital, most of the investment will be deployed in improving our presence into the US market, indeed.
Okay, does that mean a US IPO is something you're considering?
So we see that quite differently. So for us, IPO are another funding event. They are another financing event. We have this almost funny way of thinking about ourselves at TravelPerk, of thinking on a very long-term horizon, on a 100-year horizon. And so the IPO for us might or might not be a step in our journey, but it's definitely not the core focus right now.
Okay, Jean-Christophe, Taunay-Bucalo, President and COO of TravelPerk, on that $200 million raise, and of course the impacts of DeepSeek more broadly on the tech sector. We appreciate your time speaking to us exclusively after that raise, with a valuation of around $2.7 billion. Later in the show, fears around China's AI progress sparked that sell-off, of course. We're going to get more context in terms of whether or not the sell-off yesterday is justified. That's coming up later in the show. This is Bloomberg. Welcome back. Bloomberg understands Israeli Prime Minister Benjamin Netanyahu is planning to visit Washington next month to meet with President Donald Trump. The meeting would come just weeks before the end of the first phase of the ceasefire in Gaza. Israeli TV reports the US President's Middle East envoy, Steve Witkoff, is expected to travel to Israel this week to discuss a longer-term solution to the conflict. So President Trump speaking yesterday in Florida, he talked about DeepSeek. He also talked about the metals market when he was discussing potential tariffs. And he called out, for example, copper imports into the US. So here's a check on how the metals are trading this morning. Iron ore is currently flat, as you can see. Aluminium taking a bit of a hit, down 0.3%. Dr. Copper, though, lower by 46 points, down 0.5% at 9,000 per tonne as things stand. Again, wants to see tariffs, broad tariffs across the board of more than 2.5%, but again, particularly targeted sector, potentially sector tariffs as well, on metals, on pharmaceuticals, and potentially on autos as well. There's plenty more coming up. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Concerns about overvalued AI stretch into a second day, with Asian tech stocks extending the Wall Street sell-off triggered by China's progress with the technology. Nvidia edges up, though, post-market after losing $589 billion in value, the biggest one-day drop in US market history. The chipmaker says DeepSeek's advances will, though, keep demand strong for its chips. Donald Trump calls DeepSeek's release, quote, a wake-up call for US firms to stay competitive. On tariffs, the president says he wants across-the-board levies, quote, much bigger than 2.5%. So markets today are taking something of a breather when you look at European futures, looking for the next catalyst after the rout of yesterday. Will Nasdaq 100 futures start to make up for some of the damaging losses that came through yesterday? The Nasdaq 100 ending the session 3% lower, the S&P off by 1.5%. European futures currently pointing to very modest gains of 0.1%. Of course, you saw European tech hit as well by the ramifications of DeepSeek. Valuations of these tech companies being called into question, and a focus again, according to our Bloomberg Intelligence's Rob Lee, on the return on investment question on a big week, of course, for earnings with Meta, Microsoft, Alphabet amongst four of the big Mag 7 reporting this week. European futures then pointing to gains of 0.1%. SAP coming through with some decent results. We'll be speaking to their executive in the next couple of hours. FTSE 100 futures currently pointing to gains of 0.1%. S&P futures again after the drop of 1.5% yesterday by the end of the close. Currently flat on S&P futures. Nasdaq 100 futures pointing to gains of 0.2%, so by no means making up for the losses of yesterday, but at least pointing to positive territory this morning. And again, post-market Nvidia is pointing higher. But again, after a 17% drop yesterday, the biggest market drop in terms of market cap that we have seen in history, almost $600 billion wiped off the value of Nvidia. Let's flip the board and look cross-asset then. The focus again on dollar strength. And this is part of the tariff story, with Donald Trump suggesting that he wants to see across-the-board tariffs of more than 2.5%. Let's change the board and have a look at the FX space. Bloomberg Dollar Index is gaining today. The euro is under pressure. The yen is under pressure. The Swissy is bid. Euro dollar at 104. The benchmark 10-year yielding you 4.55 right now. Yields are up 2 basis points. On the benchmark 10, you have the Federal Reserve coming through with their decision, of course, on Wednesday. The decision is going to be less interesting than the commentary, of course, from Jay Powell, given that we fully expect them to stand pat on rates for the first time since they started cutting in September. Brent at 77.47 a barrel, up 0.5%. Copper under pressure on the tariff threat, currently down 0.5%. Let's get more market analysis right now because, of course, given what we're seeing across these markets, reassessing the AI trade. Let's bring in Paul Dobson of our M Live team for the pulse check on what is reverberating through these markets. Paul, where do we stand in terms of the market assessment of whether or not this is a pivotal moment for the AI trade?
Hi, good morning, Tom. That is the question that everybody is going to need to start asking themselves after that really momentous sell-off that we saw in the tech companies yesterday. As you were pointing out, futures today not giving much indication of whether the sell-off is likely to continue or take a breather. Still no sign really of a bounce, at least so far. And looking across Asia's markets, or at least those that are open because we're in the Lunar New Year period, we saw continuing selling in tech-related, AI-related names in Japanese markets in particular, and a little bit more of a gain and an uplift in Chinese technology companies traded in Hong Kong before we got to that close. So that narrative was still playing out for us there. I think people are going to be asking themselves some key questions here about the valuations attached to the very large tech companies and the capex plans. Now that we've realized that it is possible to do some of the same things on more of a shoestring kind of a budget, and that reassessment is what the investment community is going to have to be asking itself. I think one key question is, well, if you can do that much more with less, is there still an argument that this technology just continues to raise ahead? And if you did make all of this investment, what is the potential then? So it could be perhaps that the gap is filled by even more rapid advances that way.
Yeah, and do you shift your approach in terms of parts of the market you target, in terms of adoption being accelerated? Do you look at software? And is this a massive buying opportunity potentially for those who have not got exposure to Nvidia to start buying that stock if they think that this has been overplayed? Where do we stand, Paul, in terms of understanding whether the sell-off yesterday was rational or overdone?
Yeah. It seems that there were a number of reasons for the sell-off, not just the fact that we were learning more about DeepSeek over the weekend before trading begun again. At the same time, we've seen that really big run-up in those tech companies to the point where valuations were looking pretty stretched. We'd heard about really big spending plans from the likes of Meta, but also from the US government-sponsored projects as well. And that had really pushed up those prices. Then we're getting some earnings reports from a large number of the US tech companies this week. So all of those things had left the market nervous and ready for some sort of a trigger that would spark some kind of a sell-off in any case. So there's that to sort of pass through when you're thinking about, kind of were investors just waiting for that moment and looking for, did they want to hang on if there was a risk out there? I think what's going to be really key now is how do the technology companies respond? What do they actually tell us in those earnings? We heard from TSMC, we heard from Nvidia yesterday, US time, that it welcomes these advancements, says they still need loads of our chips in any case. This is a good thing, this is great for technology and for the advancement. We've heard that the others are taking a look at it and figuring out what that impact is. But as we hear from them, they will probably give us a sense of whether this is going to be actually a bit of a blow for them, or whether it's something that they can take on board and come out stronger from.
OK, Bloomberg Executive Editor for Asian Markets, Paul Dobson, on the market reaction, of course, and the sell-off that we saw yesterday. Let's get more analysis right now and bring in Aneeka Gupta, Director of Macroeconomic Research at WisdomTree. Aneeka, good morning. Do you buy the tech dip?
Very good morning. I would be a bit cautious at this level. There's a lot of fear in the markets, and I think this is that big catalyst that a number of investors were waiting for. We've always been calling for valuations being quite stretched. We've had two very, very strong years in US equity markets. And this is that wake-up call for these stretched valuations in the tech sector. And it's going to clear out a lot of the hype. We're going to see the winners bifurcate from the losers, and that is actually going to pave the way for much more reasonable valuations. So I wouldn't be a buyer at this point.
OK, really interesting. You wouldn't be a buyer at this point, but maybe it leads to more rational valuations longer term. As you look at the tech trade, Aneeka, whether it's the hardware components, whether it's the GPUs, the chips, or the energy piece, or indeed software, are there parts of this space that do look, though, attractive when you get the right catalyst? The idea that adoption will be accelerated, is that something that could prove a catalyst and something that you would factor into your decisions going forward?
Well, there's no denying that, if we look at the earnings expectations going into 2025, and especially for Q4 of 2024, the tech space is where we see the biggest opportunity. They have the highest earnings growth expectation. That is what is driving the market ahead. Now, what this new story by DeepSeek puts back into the market is a change in the valuation argument. And owing to that, I think what we will be looking forward to is what the company earnings reports actually come out with. How does DeepSeek actually impact them? Do we see further monetization taking place within these tech companies? And how does that lead to valuations going forward? So I think there's still plenty of dust left to settle, for us to actually clear out which companies will be shining out versus the ones that are way overvalued.
Do you think the hyperscalers will have to scale back their CapEx spending ultimately as a result of this?
Yes, I think this does open out a big loophole, and this is the big question. Have they been efficient enough? If China can do it in such an efficient way, with drawing out much lower cost, keeping it open source, was something missing out on the US spectrum? And could that be realigned? And could we see a lot of change going forward from this event?
So you're not, Aneeka, you want to see the dust settle, you want to see a bit more detail. You're not adding at this point, you wouldn't buy the dip, but would you be selling? Would your advice be to those who have exposure to Mag 7 to sell at this point, or would you hold until you get more details?
No, I think this is the point where, that diversification play comes into, really holds its value. You have one end of the US large cap equity market spectrum very, very overvalued, and you have the rest of the forgotten 493 actually trading at pretty reasonable valuations. So this is where those investors that have actually adopted a barbell strategy of, keeping that exposure to the large cap tech space along with that, high growth exposure, but then blending it out also with the US large cap value exposure, that would have put them in good stead. Because when we started the year, we've seen this. We've seen very, very high US yields pressuring the equity market. We soon saw, that a much more easy CPI report bring down those yields. We now have this new news of, DeepSeek triggering immense amount of volatility in the market. And once again, those value parts of the market are shining a light every time we see volatility being triggered in the markets. So adopting that barbell strategy for US has been working for us. I think clients have appreciated taking that approach, and I think that's a prudent way to go about it at this point in time.
Okay, so that's the barbell approach when we're thinking about technology. What about the tariff threat, Aneeka? What is the tariff trade as Trump touts across the board tariffs of more than 2.5%? We don't know what the implementation is going to be. We don't know the details in terms of how high he's going to go. But what seems pretty clear is that this is a Trump administration pretty wedded to some form of tariff.
That's right. I think up until now, since President Trump's election, the markets have been pricing a very favorable Trump, an easier stance or by Trump on tariffs. I think now that we've seen this new story break by DeepSeek, it's definitely going to trigger a more aggressive stance coming in from President Trump. I think he even warned about a dominance of China, their ability to actually flood the market with cheaper resources in the AI space. And it's definitely going to trigger some backlash from Trump. He's going to take a much more aggressive stance. And this is where we caution investors to be a little bit more prudent. Within emerging markets, there has been a lot of fear from, the impact of tariffs. But we've observed that the EM small cap space has actually been providing a lot more insulation for clients in the previous era when Trump was in power. So in Trump 1.0, it was EM small caps that actually dominated EM large caps. I think that's a place where you can get a bit of insulation. They have less correlation to dollar-related revenue, and at the same time, they have a higher share of income being derived from the local EM markets that are expected to grow quite strongly. So I think that's one place to take a bit of shelter.
Okay, so we've got EM small caps, we've got the barbell approach in the US. What about Europe, Aneeka? What do you do with European stocks?
Europe is definitely likely to struggle. We already are faced with anemic growth, and at the same time, we have the threat of tariffs. The only good thing going for Europe is the fact that amongst all the central banks, the ECB is likely to have, the most accommodative stance on monetary policy, and hence the easing of rates should help offset that stronger stance of tariffs by President Trump, and that should help more value-oriented sectors within Europe. But Europe is likely to struggle, so it's going to be a tough one. I think one of the avenues where we are seeing opportunities within defense, with Trump coming to power, we constantly hear of threats towards Europe to raise its spending on defense, and I think that's an avenue of opportunity within the European market.
Okay, Aneeka Gupta, Director of Macroeconomic Research at WisdomTree. Thank you very much indeed for how to think about these markets in light of the volatility coming through on the tech front and, of course, the renewed threat of Trump tariffs. Now, at 8:30 a.m. UK time, ARK Invest CEO Cathie Wood will join us to discuss President Trump's impacts on IPOs, regulation, and, of course, the AI tech route and much more. So do tune in for that interview, 8:30 a.m. UK time. Talking of tech, SAP has reported fourth quarter cloud sales just ahead of estimates as Europe's biggest tech company wins customers with new AI capabilities. Cloud revenue in constant currencies rose 27% from a year earlier. SAP has promoted AI business services to incentivize clients to shift from legacy on-site servers to IT infrastructure on the cloud. And we're going to be speaking to the SAP CEO, Christian Klein, at 7:40 a.m. UK time. Coming up, since taking office, President Trump has used executive orders to end automatic citizenship for children of unauthorized migrants, withdraw from the Paris Climate Agreement, and eliminate DEI efforts in the federal government. We'll discuss the legal implications of the president's plans next. This is Bloomberg. Welcome back. Now, Donald Trump has made liberal use of executive powers, declaring national emergencies at the US-Mexico border, and he has used them in the domestic energy landscape as well. The orders have enabled him to sidestep potential delays from Congress and federal rulemaking processes. But this being the US, litigation is common, of course, in response to presidential use of emergency powers. Joining me now to discuss the legal landscape, what it means for policy making in the US across migration and energy and clean energy, is Somesha Ferdinand, principal at Ferdinand Law Group and former trial attorney for the US Department of Justice. Somesha, great to have you on to kind of give this some context. I kind of want to start with the size and scope because the flurry of executive orders has been head-spinning. Put this in context for us.
It has been an unprecedented situation to have dozens and dozens of executive orders within the first week of his second term. It is clear that President Trump, since he was last in office, has been thinking very carefully about the legal hurdles and how to strategically put into place his program. So if we talk, for example, about immigration, 8 executive orders, clean energy, 6 executive orders. There have been orders around DEI initiatives within the federal government where federal employees that are very senior have already been removed from posts. So what the president has done very specifically in terms of immigration, you're talking about mass deportation plans. He has declared a national emergency at the southern border. Now, national emergencies are generally for national disasters. They're usually for when the public health or, for example, in California, property is being threatened. Also, he has declared a national energy emergency. Again, an emergency is generally for national disasters. We are in a state where the U.S. is producing more oil and gas than ever. So query whether these are indeed national emergencies. But what it does do is it allows Trump and his team to put into place a series of actions by federal agencies which will allow them to go forward with prioritizing certain activities over other activities. So, for example, for immigration, it allows the president to have the military at the border, military planes, military troops, military detention. So it allows him to put his agenda into place quickly. There will be, however, strong, significant legislative and judicial barriers.
OK, and I want to get to that because as an investor, I would want to know what stands and what crumbles in the face of legal challenges, particularly when it comes to energy and the Inflation Reduction Act, which, of course, was a package of funding around renewable energy. What falls to judicial pressure and what stands?
Exactly, Tom. So if you think about what falls to judicial pressure, what will fall will be any actions that are unconstitutional, any actions that breach on the individual rights of persons. So, for example, Trump can very well say we're going to halt wind projects. However, the wind projects which are already in place will continue to go forward to the extent there are corporations that are in partnership with or have put into place other kinds of partnerships or federal contractors, they will be able to file suit to put a pause. They can do something called a preliminary injunction, for example, if there is potentially irreparable harm beyond monetary harm. And they can put a pause on these actions, and that will mean Trump will have to work with Congress to actually change the laws. There will be significant federal rulemaking. As you may know, Trump has been invited by the House to speak on March 4th. He is meeting with the House of Representatives now because it's really going to have to be plans that he puts into place with Congress. It's going to take a long time. There are going to be committees, then they're going to vote, and then it's going to go to the Senate. There's an entire process of federal rulemaking, so none of this will happen very quickly.
OK, it's going to take time. Watch this space. With the context, Somesha Ferdinand Law Group Principal. Thank you for giving us the context around some of these executive orders and what it means, particularly around energy, the Inflation Reduction Act and migration. Now, President Donald Trump says Microsoft is in talks to buy the US arm of TikTok, Microsoft. Other bidders so far include AI startup Perplexity and billionaire Frank McCourt. Microsoft and Oracle were in the running to buy the app back in 2020 when Trump first pressured Chinese owner ByteDance to sell or face a ban. Keir Starmer and Rachel Reeves are set to tell top executives that the UK plans to allow companies to invest pension fund surpluses in order to unblock billions to help drive economic growth. Under the plan, employers will be able to invest some of the surplus of defined benefit pension funds to purchase equipment or provide additional benefits to fund members. The Prime Minister and Chancellor are hosting a roundtable meeting in the City of London later today to discuss their growth strategy. There's plenty more coming up. This is Bloomberg. Welcome back. Happy Tuesday. As the markets continue to assess the valuation question posed by DeepSeek and the spend around capex on AI infrastructure, let's reflect on the pain trade of yesterday. Historic in terms of the drop that we saw for Nvidia, losing almost $600 billion of market cap in a single day. We have never seen that in history, ever. And it really questions whether or not companies need to be spending reportedly up to $70,000 per Blackwell chip, the most high-end chip for Nvidia. Does that spend need to continue, given what DeepSeek has been able to achieve? Let's flip the board and have a look at what's happened more broadly across these markets, because equal weight, and this is the pause, this is the catch-your-breath moment, equal weight, the S&P actually eked out gains yesterday. So, does the broadening out of this market become a consequence of the rout that we've seen in technology? Healthcare, staples, finance actually eked out gains of about 1% yesterday. So just bear that in mind as we weigh up the impacts on these global markets. Coming up, we have the opening trade, the team there set up for breaking down this story for you. Chrystia Freeland as well is going to be speaking exclusively with Bloomberg's David Gura later today at 4 p.m. UK time. The opening trade is up next. Arguably the person who brought down the Canadian government. Stay with us or Trudeau. This is Bloomberg.